At HousingWire, we have a bit of a debate about whether home sellers will freeze up again this year as interest rates stay stubbornly high. We've had seller growth for 18 weeks in a row, and I've been previously confident that that trend will continue. A couple of months ago, when rates were still in the sixes, I suggested we could see 15% home sales growth this year. More sellers means more sales, but it's now March and mortgage rates are at the highest they've been all year. And the economy continues to report strong numbers, so the Fed is growing less likely to cut rates soon. As a result, as inventory builds, the sales growth trend shows signs of slowing. Will sellers retreat entirely like they did last year? We know that these higher mortgage rates are deterring buyers and inventory is building, but will rates deter sellers also? Will higher rates keep a cap on inventory like it did a year ago? I still feel like the biggest risk for the year for housing is too much inventory growth with fewer buyers and more sellers. And I always emphasize the Altos rule, which says that higher rates leads to greater inventory. Mortgage rates are up over last month and over last year. Inventory is up in lockstep. So that rule holds true. Higher rates equals more homes on the market. And in the face of growing supply of unsold homes on the market, we have to ask how much inventory will the market handle before home prices start to decline? So we're at 19% year over year inventory gains now. That seems like a lot. But it could be maybe 40% growth in the number of homes on the market by this summer if mortgage rates stay high or go higher and sellers don't get cold feet. Year over year inventory change is one of the most clear signals for home price changes a year further out. So that's something we're going to keep an eye on. And the fact is, mortgage rates could keep climbing. Up until recently, the bond market has expected the Fed to cut rates early in 2024. But because the economy is so strong and resilient, those rate cut expectations are being pushed out further into the future. So the two questions we're examining today are, how much would inventory have to climb before home prices fall? And will sellers back off so that inventory is capped like it was last year? At Altos Research, we track every home for sale in the country every week. This market changes too quickly to wait a month for the latest data. We track all the pricing, all the supply and demand, all the sales, and the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's look at the details for the U.S. real estate market for the first week of March 2024. So inventory grew by a little bit this week. There are now 498,000 single-family homes unsold on the market. That's an increase of a fraction of a percent from a week ago. And as I've mentioned, available inventory is climbing across the country as demand slows with higher mortgage rates. So the unsold supply of homes on the market is up 19% from last year at this time. Last year, the available supply of homes on the market was still declining at this point in the spring market. So year over year inventory gains aren't really from a flood of sellers, but because demand was stronger last spring. Rates are higher now, demand is less, inventory is building. Interestingly, inventory is now 107% greater than this point 2 years ago at the end of the pandemic buying frenzy. The spring of 2022 was when rates started rising. And in this chart, the most recent rate period is shaded red at the right side of the chart. Rates have been generally rising for 2 full years. Inventory also, therefore, has been rising for 2 full years. Because available inventory is still a third fewer than pre-pandemic, you can see how it'll take a few more years with elevated mortgage rates to get the available supply of homes back to the old normal levels. And when I examine how much inventory growth on the will the market bear before home prices decline, we can see the big upslope of inventory building in 2022 right at the right end of the chart in the red, where that led to home price declines. That big increase build of 2022 led to home price declines. But also, the inventory rise of 2018 led to flat home prices a year further out. So early 2020, just before the pandemic boom ticked in, home prices were flat year over year. So we're going to watch this inventory line this spring. We're going to watch whether sellers stay away like last year, or whether they lean in and put a lot more supply on the market. It's going to be very important in March and April this year. Pivotal time for understanding home prices for the entire year. Right now, that inventory line is inching up inching up weekly, and we're going to watch to see if it shoots higher more quickly. There were only 52,000 new listings this week. That's a couple percent more than a week ago, and only 5.7% more than the same week a year ago. So that pace seems to be slowing. Seller growth has been 10 or 15% more recently, and now the growth rate is under 6%. So sellers may be slowing down a bit, but I haven't seen signs that they're staying away totally on the sidelines like last year. But that momentum could indeed be waning. So we are seeing just everyone get frustrated by stubbornly high mortgage rates again. So in this chart, each line is a year. And you can see the dark red line is this year. The light red line is last year. So you can see each week now has more sellers than a year ago. The gray lines are previous years. The lines are pretty squiggly, and there's a fair amount of noise week to week in the numbers. A lot of things can accelerate or delay sellers in a given week. So one thing to note in this chart is that the sellers last year cut off in March. Normally in March, new listings that line would be climbing each week pretty quickly. But last year, the light red line turned horizontal in March. See where the dark red line is through today, and then the light red line last year didn't climb. So I'll be watching this new listings volume in the next couple of weeks. I've been assuming that we are on a growth path for sellers in 2024, but if the next couple of weeks comes in below those expectations, with fewer sellers testing the market, then I will have to revise my full year expectations as well. So we're going to watch here for the next couple of weeks. The other important takeaway from this data is that the new listings volume isn't surging. Because homebuyer demand is low with high mortgage rates, total inventory is building 19%. It's kind of a big deal. When you hear that fact, it is very easy to jump to the conclusion that this market is tanking. And as I've said, we could be setting up for future home price declines if inventory continues to build significantly. But here's the important point. There still are not a lot of sellers. It's slightly more than last year, but it's not a lot. See the gray lines on this chart? There are many years where there'd be 60 or 70 or 80,000 new listings in a given week in March, and we're at 52,000. So half of the supply-demand balance is not really scary. I keep expecting the number of sellers to climb, but if anything, this pace has been receding in the last few weeks. So if you have a hypothesis that rising inventory in 2024 will lead to a home price crash, this is going to be a significant and important data point to track to see if that's playing out. We should be watching immediate sales too. There were 18% fewer immediate sales this week than the same week a year ago. That seems like kind of a big deal. It is remarkable how rates over 7% slow home buyers. Now remember that immediate sales are what we call these properties that get listed and go into contract within a couple of days. They essentially bypass the active market. They are not in active inventory, they're already pending. And I like this step because it gives us a really clear indication of the demand in the market. Home buyers express their urgency when they snap up the best properties right away. Last spring, there were surprising levels of demand as illustrated by growing immediate sales. This year is much weaker. So in this chart, the height of each bar, the total number of new listings each week, The light portion of the bar are those that went into contract immediately. There are always immediate sales in any market, but the best homes go at the right price, go very quickly. During the pandemic, with all the bidding wars, we saw as many as a third of the new listings become immediate sales. It's like 22% this week, 14,000 or so this week, when in last year it was 18,000. The difference is 80 basis points in mortgage rates. There are fewer deals, so fewer people are jumping right now. So I can't imagine how the immediate sales metric improves this spring until consumers see mortgage rates ease back down. Another indicator of demand we use is price reductions. The percentage of homes on the market that have needed to reduce their asking prices from the original list price. That metric ticked up again this week. There are now 30.5% of the homes on the market with price cuts. That's up just a smidge from last week. It's easy to see exactly how home buyers wait when mortgage rates are stubbornly high. In this chart, each line is a year. It is not uncommon for price reductions to be starting their seasonal climb in March, but you can see how last year demand was still stronger than supply, so fewer sellers were taking a price cut each week. And this year, the trajectory has reversed. So it looks like in a couple of weeks, we'll have more price cuts on the market than a year ago. So you can see that trend starting to turn at the left end of the chart. When we examine the question of how much inventory leads to home price declines, this is another way we can see it. So see the light red line from 2022, 2 years ago. Price cuts were just about to turn the corner and shoot higher. That steep climb was sellers finding suddenly fewer buyers. Home prices declined on a year-over-year basis another year out, Q1 of 2023, but you could see it here first in the price reductions data. So let's watch price reductions. Do they rise above the normal zone by May? Like that'd be a real signal that inventory growth is hitting home prices. We can see already that home prices are not accelerating. They are staying barely above last year at this time. The median price for single-family homes in the U.S. is now $429,900. That's up a fraction from last week and just over 1% more than a year ago. There are really no signs of super strength in home prices. The median price of the newly listed cohort is just under $401,000. That's down a notch from last week and a couple percent higher than last year at this time. So you'd expect home prices to climb for the rest of the spring to peak in June. We can see how sensitive this number is to changes in mortgage rates, though. And there are buyers on the sidelines. And if rates were suddenly to fall again, you'll see inventory fall with new bidders. You'll see fewer price reductions, and you'll see these leading indicators of home sales prices, like these price of the active market and the new listings each week. They will rise with that new demand. That's if mortgage rates were to ease down. But the fact is, rates have been climbing. And we can absolutely see the impact on home buyers. So these are pivotal weeks for the housing market. There are home buyers and sellers sitting on the sidelines waiting for conditions to improve. And meanwhile, mortgage rates are actually rising, so conditions may not be improving. If potential sellers knew the data, would they act differently? So if you need to help buyers and sellers see the data, you should join us at Altos. Go to altosresearch.com, book a free consult with our team. We will help you know how to talk about this market with your clients and prospects today. Put the data in their inbox every Monday. There's a link in the description below to join us. Click that and let's get started. Thanks.